Hello, wherever you are. Welcome to Module 11, Social Insurance Programs. Learning objectives. There are four broad learning objectives that I would want you to remember. One is understand the rationale for the existing forms of social insurance programs. In other words, why is it that the United States government found it okay or find it more better to have social insurance programs for her people. Second, you need to critically analyze the effectiveness of the programs. In other words, just like your paper, analyze, critique, evaluate the effectiveness. What we are requiring you to do is in terms of amount that the recipients receive, is it enough? Eligibility, who is qualified to receive the benefits? Is eligibility fair? Is it just? Is it democratic? How about the length of benefits? Is it enough in terms of if, for example, you retire at 62 versus retiring at 65 or 52? How about if you lose a job? The weeks that you are given, are those sufficient? Things like that. 3. Understand the core problems concerning benefits to the vulnerable and low-wage populations. The benefits, yes, they receive, but those benefits have some problems or bottlenecks. There are some hurdles. Understand what those hurdles are. And 4, critically understand the factors that threaten the solvency of the Social Security. In other words, it is believed that Social Security may not be there or around when your generation retires. What are these things that ail Social Security or make it not to be solvent or not to be or make it to be threatened? And then watch that video, just a very small 3-minute introductory video about what Social Security is all about. So, social insurance, what do we mean by social insurance? Of course, an insurance is a protection to you when you get into a problem. For example, you have car insurance, meaning that you are insured to drive that car, that in case you have an accident, you are involved in an accident, you are put back to where you were before that accident. The social insurance is the same way. It's the cornerstone of the US social welfare policy. And what is it? It's basically a system where you or anyone else is compelled through your payroll taxes or through your income taxes to insure yourself. And you are being compelled to insure yourself because the government realizes that there will come a time where your current situation might change. It might change because of indigence. You can fall into poverty anytime. And these are some of the situations that could happen to you, perhaps. For example, you may retire. Everybody is going to retire. When you are young today, you may think that you are going to be young forever, but you are going to retire at one point. You may lose your job for whatever reason, either because of market forces or you are laid off, or whatever reasons that you lose your job. How about the person who is a breadwinner, whether there's a woman in the home or a man in the home, dies? What happens? They need to compensate you so that you don't fall into poverty. There could be some problem with disability. So these and many other reasons really make such insurance mandated that you should have it. There are 3 broad social insurance programs. One is the Social Security. Also, sometimes we call it the Old Age and Survivors and Disability Insurance Program. Second, you have an employment insurance program, workers' compensation. We have so many social insurance programs, and for an exhaustive list, I've given you a link. Please peruse through that link and see what kind of programs that we have. So let's look at the old age survivors disability program, also known as Social Security. Okay, this is the largest program in the nation. The largest meaning that it covers more people than any other program. Almost 90% of all workers in the United States pay into the program. It's a federal program. That means it's federally administered, and it's administered by an independent agency called the Social Security Administration. Some of you may have interacted with that agency. It is considered a stellar example of a program that has worked. It is efficient, it's effective, it's loved. Americans like it. In fact, someone once said that social security is the third rail of politics. What that means is that if you are a politician and you are touching social security, you may lose your job. They may vote you out of office because it's very popular. In 1996, 25% of households depended on monthly social security income. Please find out how much or how many or what percentage of Americans today receive social security monthly checks. I think that's a test question. This table basically tells you that about 62 million Americans receive monthly social security checks. This costs about $80 million, and each person individually receives an average of $1,291.46 at least by today. That was just a year ago. The most expensive program is the Social Security program, of course, followed by survivors benefits, disability insurance, etc., etc. So how does Social Security work? This is how it works. Today's workers, meaning you and me, you pay into the system, and the money that we pay into the system is used to pay current retirees. That concept is known as pay as you go. So please read it carefully. I think it's a test question. Because of that, birth rate, meaning that the more we have many children being born, the better for the system, because essentially they'll be tomorrow's workers. Longevity, meaning life expectancy. If people live longer than expected, it means the system is going to lose in so much money, since they are going to require health care, they're going to require housing, they're going to require everything else that you need to care for someone who is elderly. Employer and employees each pay a tax into the system of 6.2%, meaning that if you have a job, you're going to pay your social security taxes of 6.2%, and your employer will also pay a matching tax amount of 6.2%. The total amount, therefore, the total amount tax that each employee pays in the system is 12.4% of their payment of the work of their check. I want you to pay attention to this because there's a question that might be confusing. Read it carefully so that you know what is it exactly the question is asking you. Now, employees only pay into Social Security the first $102,000. Meaning, if you're paying in, you're paying. If you're earning $40,000, $30,000, you're paying. But for the rich, even if you're earning $105,000 or $200,000 or $300,000, $1 million, the only money that is taxed is the first $1,000 or $2,000, and then the rest is not taxed. This is one of the debates that we are currently having, because some Americans feel that the rich are not paying their fair share, that we should tax beyond $1,000 or $2,000. So money is put into government reserve trust fund, meaning that You pay into this and you pay current retirees, and the rest of the money is put into reserve or trust fund, which means that there should be money enough for the retirees tomorrow. Well, the government uses this money for other projects, for example, for the military, for education, for other projects that it requires. The Bush plan, I think this is a test question, that was supposed to modify Social Security could not garner support. It could not get enough support because older people vote, and they rejected it. As I told you, that is the third rail of politics. If it had gone into effect, it would have diverted some payroll taxes into private accounts, and people were very, very much against that because, you know, private accounts, sometimes the market does not do very well. You knew very well about the housing market not so long ago. As a result of the 2010 Affordable Care Act that was passed by President Obama almost 10 years ago, it was expected that Social Security will remain strong or solvent for the next 12 years. Now that it's been chipped away so much by the current administration, I'm not so sure whether that still holds true. I think I've explained this in my previous explanation, so I think I'll skip it. The second program, social insurance program, is unemployment insurance. What is it? Unemployment insurance is an insurance for workers who are either fired or laid off from the job. That means if you're fired, you still receive the money. It's a federal and a state-run program with the two basic formulas. The first 26 weeks of your unemployment, your state will pay you the benefits. After 26 weeks, then the federal government will now come in and take over from the state and relieve the state, and the federal government will pay you for the next 13 weeks. Who is eligible? Any person willing and able to work and has paid into the system is eligible. You must have been working and employed for a specified period of time. In 2006, for example, the average duration of unemployed workers was 15 weeks. I think that's a recalled question. Women generally are less likely to receive unemployment insurance. Why is it so? Because women are notoriously work temporary agencies, or they work part-time, again, because of some of the domestic responsibilities that we as a society do not compensate women enough. Unemployment insurance is a regressive tax. Again, that's another concept that you need to remember. What's a regressive tax? A regressive tax basically means that even if you're a CEO of a big corporation or a janitor of that particular corporation, you only pay into the system a flat rate of $56 per paycheck. It is regressive because if both of you lose your jobs, the CEO will get less of unemployment insurance compensation compared to the janitor. Why? Because it's assumed that the CEO may have at least some savings to help them go over that bump. As I said below, unemployment insurance has some problems. Some of the problems are, part-time workers, temporary workers, low wage, etc., etc. Those are both problems, and some of those I've just explained before. The third social insurance program is workers' compensation. This is for workers who experience illness or injury or death while on the job. So the basic principle is that employers should assume cost of occupational hazards or occupational disabilities without regard to fault, whether you are fall sick, whether it's your fault or you get injured on the job because it's not your fault, you are Your employer is required to compensate you. The laws governing workers' compensation are different. They vary from state to state. For example, in 2006, about 6,000 workers were killed on the job. I don't know what the number is today in fatal traumatic injuries. This is about 16 workers a day. You can imagine if we didn't have this program, how the survivors would be. So it is essentially a good program. So workers' compensation, some problems. One of the problems that benefits levels are established on the basis of state formulas. Now, so one state, from state to state, they're different. The cost to employers has been rising. That's why employers and corporations do not like it. There's a great variability among states, and in some states, employers are exempt from workers' compensation. Social Security dilemma. When Social Security was enacted into law back in 1935, it's now 15 years, back in 1935, life expectancy was 63 compared to today where life expectancy is 78. That means we have a gap of 15 years that we have to compensate and keep people basically who are alive. So the dependency ratio in 1950, the dependency ratio basically means that the number of current workers it takes to support a retired worker. The dependency ratio in 1950 was 16 workers could pay one retiree. In 1997, it was 3 to 3. It is estimated that in 2025, if the current situation holds true, there will be 2 workers paying for one retiree. That margin is very small, and especially people are living longer than before. There's a difference between social insurance programs and public assistance programs. Example of social security social security programs are beneficiaries and employers are required to make a contribution. That's a social insurance. The public assistance programs are financed out of general tax revenue, and these programs are usually means tested, meaning that you are paid depending on your need. For social security, benefits are paid out of legal entitlements. In other words, social insurance programs are entitlement. Legislatively, the Congress is mandated to set aside money for social security. Public assistance, the opposite. Recipients are required to show that they are poor, so means tested. And depending on the administration, these public assistance programs can go away anytime. They can reduce in terms of payments, or they can increase depending on the administration. Example of social insurance public assistance programs are like, again, old age survivors and disabilities, example of social insurance. Temporary aid to needy families, a public program. Unemployment insurance is social insurance. Medicaid is a public assistance program. So understand which programs are social insurance and which programs are public assistance, so that you can be able to understand them and ask the questions, as also so that you can help your clients. This is the proportion of who receives what. In 2011, which is not different from today, about 64% of social insurance programs went 64% went to retired workers, 15% disabled workers, and of course you can see the ratio of the benefits and who got what. Characteristics of the social insurance in the United States. Well, we have some programs that are broad-based, like social insurance, where 90% of all workers pay in the system. Some of them are smaller, targeting the poor. Others are generous others are not so generous. Some offer uniform benefits across the nation, some do not. And because of these variations or variability, some people, some scholars suggest that the United States has two-tier system of social insurance. One for the rich, the top tier, and one for the poor. So these are some of the upper tier programs that are popular, that are loved, that are less stigmatized: Social Security, Medicare, disability insurance, workers' compensation, and employment insurance. Those are what would be considered the upper tier programs. The lower tier programs would be Medicaid, earned income tax credit, supplementary security income, welfare, food stamps. As you can notice, most of the lower, not even most, all of the lower tier programs are for the poor. Mostly minority receive them, mostly women. And so some have suggested that we should get rid of that two-tier system. So abolish the two-tier system, right? That the police should ensure more upper-tier programs. That means that the United States should have programs that more or less resemble the upper tier, where we guarantee healthcare for everyone. That we ensure that people have parental leave. We have subsidized childcare for all Americans. That all Americans should have great access to education. That we should resist mean-tested programs, etc., etc. Some of the programs are uniform. For example, TANF, unemployment benefits. The program that has a big variability is workers' compensation. For example, in Alabama, if you are injured on the job, right, you get $531 duration of that disability, right? In Mississippi, it expires after 9 months and you only receive $316 a month. How about if you lose your hand on the job? In Indiana, that hand will be paid $53,500. Maybe it has changed a little bit. In Illinois, which is the next door neighbor state, the same hand you are paid $181,700. So you can say that if you can ever want to be injured on the job or lose your hand, you better lose your hand in Illinois and not in Indiana. How about if you are killed on a job? In Minnesota, family receives $15,000 for burial expenses. In Iowa, they only receive a capped at a third that amount. So it varies from state to state. So why do you have two-tier systems here? The upper tier are inclusive, the lower tier are mean tested, so study that. Programs are financed by payroll taxes, social insurance. Programs are financed by general revenues. Social insurance, their entitlements means that legislatures are mandated to provide money to pay for these programs. These are fewer citizens, many are children who cannot vote. Greater public support, very few support. Political advantage, more people are served, serve very few people. In summary, social insurance programs prevent poverty among workers and retirees, and you have seen that most poor people are children and not the elderly, because we have social insurance for them. Because of changes in demographics, the solvency of the programs is unstable. In other words, we have low birth rates now and people are living longer. So that balance could create a problem. Social Security is the nation's most effective anti-poverty effort, and people like it, although at the beginning they didn't like it. It remains the bedrock of the U.S. social welfare program, and because of that, about 10% of the elderly only 10% of the elderly are poor. So watch that video and have a wonderful week. Let me know if you have any problems or concerns. Shoot those questions to me on Blackboard. I'll be more than willing to answer them.